I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this early Friday afternoon on September 6th. Okay, so we had the big recovery from August, and between the recovery and some of the earnings gaps we saw and some other big picture evidence, whether it's sentiment or trend or some of the market studies over the past few months, so on and so forth, I thought, and I still think, the next big move is up. There's going to be a sustained uptrend out there. The question was, does that uptrend start now? Is it just a V bottom? Do we retest the lows? Do we muck around for 3-4 weeks? That sort of thing. And this week obviously is more on the retest, sort of mucking around front. It's been very severe selling. One bad day is one thing, but the Nasdaq's down about 5 to 6% as I record this. Chip stocks are down something like 11 or 12% on the week. Okay. And just a lot of stocks are getting hit, and growth is definitely the worst thing, and chips and networking, those are the worst things, but it's kind of dragging down, except for defensive stocks, it's dragging down most other stuff. Okay, so what does it mean? Well, I think, we're in some sort of retest bottom building process, and how that goes is just something that we're going to have to find out over time. The Nasdaq is already about, from high to low on a closing basis, it's already about, as I record this, about 80% of the way down, okay, toward the low. So maybe it could be a retest here, which usually take place 4 to 8 weeks after the initial low. So maybe this is a retest, say early next week, and then we have a bad Monday, we get going from there. I'm all for it. We just don't know that at this time, obviously, okay? And when there's just so much pressure on some of the old liquid leaders, it's just tending to weigh down on the entire market. So long story short, to me, it's a time for caution, but also taking things on a stock-by-stock basis. Caution meaning, small positions if you are buying, a decent chunk of cash, whatever that means to you, okay? On the flip side, if you do have some stocks, especially if you've held them through sort of the August wipeout, you have profits, you have a reasonable position size, so on and so forth, and then the stock is getting hit this week, but it might be, I see a lot of stocks that maybe went from 40 to 30, back to 45, and now they're at 38. Well, 45 to 38 stinks, but it's still way above the prior low. Not that you have to hold it down to the prior low, but it's still way above the prior low, even as the Nasdaq, like I said, is most of the way down there. So if you do have some stuff that's sort of at the 50-day line while everything else is below, I still think it's okay to hold on to all or most of it, give it a chance. But for the most part, my biggest thought is the big money is going to be made in the next sustained uptrend, like I said, which I do think is coming, whether it's after a low, right now in the Nasdaq, a retest, or whether it's after the election or sometime in between, whatever. There's going to be a sustained advance where there's some big money to be made. Right now is not that time. Okay, so to me, I'd be more cautious, still try to hold on to some resilient names, but also honoring, your stops, loss limits, and just seeing how things go here, into next week. Okay, let's hop into the charts as usual. I'm using a program called Market Surge. It's a product of Investors Business Daily. You can learn more at marketsurge.com. So here's the Nasdaq. Again, on a closing basis, I mean, these are rough numbers, but if you kind of did this sort of thing, or I guess let me do this, right? And then if you kind of look at this, it's basically 80% of the way down. What does that mean? It doesn't mean anything, honestly, but it's a measure. The Nasdaq is certainly the weakest index, was the strongest, obviously, for the last, year, 15 months. And now it's the weakest, being dragged down by what was the strongest group. This is the chip stocks, okay, which are actually nose below the 200-day line. Again, I'm recording this, I'll tell you right now, it's about 1:23 in the afternoon. So we'll see how it closes. But clearly, relative weakness. You can see the relative performance line for chips is hitting a new low. Just trend-wise, everything, the Nasdaq was the weakest. And you can see Monday, this was Tuesday, actually, after Labor Day. That was a decisive break, below the 50-day line, and obviously following through here. But everything else is kind of joining the, I don't want to say the party, but the weakness here. So the S&P is slicing today. Again, we'll see how things close, but IWM, this is small caps, slicing, mid caps, that sort of thing. Overall, a lot of these, like especially say small and mid caps, they're still kind of in this range. It's a tricky situation where some of these things, it looks terrible, but then it bounces next week and then it looks good. And that's the nature of a trading range. But either way, I would just say when I look at these charts, the trend is not up. Okay, you could say it's sideways, you could say it's down, you could say it's short-term down, there's support here, you can say all that sort of thing. But there's really not, no one's going to look at any of these charts, even the strong ones, like say when I say strong, the relatively strong ones like the S&P 500, and say, the intermediate term trend is up. At best, you could say sideways, but it's not up. Okay, so we'll see how it goes on that front. All right. The other thing is just, when you do look at the growth stuff, which it's obviously what I do, but growth does tend to lead. I know people talk about growth versus value, but if the liquid growth leaders are getting hit and the growth areas are getting hit, of course there's some stuff that can counter trend or hold up well, but it's not like, growth gets hit and there's 500 other stocks that look great and are going up, in a big way. That's usually not how it works, okay? So when you do look at other growth measures, this is the IPO fund. Again, it's not, the end of the world, but clearly this rally is now in some sort of retest, base building phase. The IBD 50 index, this is updated daily. So right now I would just say I have no idea, but it's probably here, that sort of thing. Clearly below the 50-day moving averages. The unweighted Nasdaq 100 is something I like. I mentioned this most videos here. Still couldn't get through the 90 level, and now it's, again, I don't know, it's basically halfway down, a little bit more than halfway down its range. So the trend is not up. Hopefully this, and hope isn't a strategy, hopefully this is kind of the retest. You look at the Nasdaq. I did a study years ago, but if you look at like the 1998s and even like the early 2000s, there was a double bottom before the bear market really kicked into gear. It's usually 4 to 8 weeks from the initial low. I haven't counted it out, but it's about that. It's like 5 or 6 weeks at this point. So maybe we come in next week and it's scary as hell. We find support and we get going from there. And there's rotation back into growth and defensive stocks fade. I'm all for it. You know what I mean? But you kind of have to see it to believe it. Right now, it's just the intermediate term trend is down. Speaking of defensive stocks, or I should say the intermediate term trend is certainly not up. This has just been the warning sign to me. Not like it's a red flag. It's not something you can trade off of that closely, but this is just XLP. And, I'm sorry, it's just been kiting higher, hitting new highs, while most other indexes either haven't or, we're lagging or whatever. And that's just a sign of, here, relative strength line hitting a new high today. It's just a sign that people are looking for safety, okay? XLV, same sort of thing. It's finally hit some, turbulence this week, but, has been hitting new highs recently. And then XLU, where I saw somebody posted that XLU hasn't even hit its 10-day moving average in like a month and a half or something silly like that. So clearly there's been money going into the defensive areas, while growth in general, chip stocks, Nasdaq, equal weight Nasdaq 100 have been some of the weakest things out there, okay? And just, I mentioned SMH, but just, you're seeing a lot of these names like this. So this is Broadcom, okay, AVGO. This is kind of where we're at. Is it definitively like done? Has it topped forever? I mean, no, I'm not going to say that. But again, these names, in Broadcom's case, I'm going to say this thing broke out at 65 or something like that, way back 15 months ago, almost tripled, to 180 something. And now it's very wide and loose. There's been no buy. You can see there's been no real weekly buying here for a couple months. I'm not picking on Broadcom, but there's just a lot of these stocks that have had big moves. Now there is support in here. It's the prior lows. It's 200-day line. So again, ideally this is kind of the short, sharp shakeout, scary shakeout, retest in some of these chip stocks and old leaders that, allows them to get rid of the rest of the weak hands and we go up from here. But I would just say you have to see it to believe it. Not that the stock has to go up here to believe it, but you'd really like to see some big volume reversal starting hopefully today, this afternoon, but certainly next week, okay? So that's that. The only other thing I would just mention before we get into individual stocks and some strategies, so to speak, is continue to see, this is the 10-year note, okay, yield. And this was sort of your August crash. Coincidentally, you're kind of retesting that low here today, which is kind of interesting. But either way, it's kind of like, will it break down or not? It's been sort of testing this area. It looks like it's breaking down, but interest rates do seem to be coming down. There's talk of 50 basis point cut now for the Fed. Longer term, this is another, I think, tailwind for the market where you're saying longer term, I think the next big move is up or there's a sustained uptrend out there somewhere, a few weeks from now or whenever. And this, I think, is going to be a tailwind for the market. But right now, there's other things that it's focused on. In terms of individual stocks, so there's a couple different, I don't want to say ways to play it, but just things that I'm sort of seeing. One is just, if you are underinvested or you want to roll the dice, look for things that clearly were strong, clearly showed buying, clearly showed new highs in terms of price and relative performance, and are now pulling back. So this is Halozyme, which is HALO, and I've mentioned this regularly on the videos here. The breakout came, I think this was in July. Was it June or July? June. So here's the breakout on some patent. I don't want to get into it, but a patent thing, and they raised their long-term guidance. Okay, a nice move, pull back to the 50-day line, and then accelerated higher, and now you're getting this kind of steep pullback. Now, can it just keep going like this? It could. So there's a couple ways to play these sorts of things if you're looking to put a little bit of money to work. One is you just start small and you use a pretty tight stop. Usually give it a little leeway, not just like the 50-day line. It's kind of a fence that can be leaned upon, not just like an exact level. So that's number one, and you could get some pretty good risk-reward situations out of that. The other idea is to either do that and in combination have some sort of buy stop up here and saying like, hey, if this stock does get going, this is going to look like an early stage pullback resumption, which is what I call it, ESP. But if it doesn't and it keeps going down, well, then I'm not going to buy it, right? You know what I'm saying? So that's just a couple ideas. But there are some of these names that are pulling back, I think, normally. NTRA is another one, NTRA. This one's a little bit, I've mentioned before, it really hasn't had much of a correction except for this dip here with the market, and then it came right back. So here we are dipping again. Again, higher lows the whole time, higher lows, higher highs, dipping in here, no volume, on the pullback, but it's just getting tossed around by the market. Whether it's buying here or just waiting, but to me, this is a classic, like, if the market can bounce and this thing can get going, I'm not giving a specific level or advice, but just it's that sort of setup that's out there, okay? I would also mention that within growth, actually, I don't know if this is the IGV, which is software. So I don't know how to measure it because it is at the 200-day line. But if I just look at this chart, first of all, it's been base building for a while. This is IGV, which is the software ETF. But if I just look at that chart recently, really since the July low, let me clean it up. If I just look at this portion, it just looks a lot stronger than, say, the QQQs, okay? And there has been some strength in software. I've mentioned ServiceNow before, which tried to break out last week. It actually did break out briefly, but never really confirmed it. And it has seen some selling this week, but overall it's hanging around the 25-day line, whereas most indexes, Nasdaq or whatever, are somewhere down here. Today, as I record this again, we'll see where they close, but this is GuideWire. Now, full disclosure, we've had this in top 10 for a while. We took some advice taking partial profits, which I'm happy about this morning. So I'm just mentioning it, flagging it as just an overall, relative strength here. You can see clearly it's in an uptrend, acting well. Samsara, which I've been following for it seems like since I was a baby. And you can just see it's like a little bit of a kid scribbling on a piece of paper, just kind of up and down. That said, it is gapping on earnings. It has had these earnings gaps that haven't worked before, but again, flagging it is on my watch list, and it is I would note, as of right now, it's a new price and relative performance peak, which it hasn't always really been when the stock has had some signs of strength in the past. So IoT, Clearwater Analytics, CWAN, this is thinner, and so, buyer beware sort of thing. But a very nice base in here. We mentioned it, broke out on earnings, I believe. Yeah, on earnings here a few weeks ago. Nice follow through, and now it's it looks sloppy, but it's just down to the 25-day line. So I am seeing some relative strength in software names. I'll name drop Jacob Mintz, who's our options guru, but he's actually seen a lot of call buying in some of these software names. To be fair, a lot of those software names he's seeing it in are kind of little junkier stocks, not junkier stocks, but stocks that are beaten down. But some of them are in some of the resilient names too, okay? So it's a sector I'm watching that if and when we get that next sustained uptrend, I think software could help lead. Some things like DoorDash, and I'll even say DoorDash and Uber. So DoorDash had this big correction. It's been a leader. It's established, right? Pretty deep correction, 31%. But then it had these two big volume weeks I've mentioned before. And it is a 4-day week here as I record this, but look at the selling the last 3 weeks. I know it was holiday, late summer, and obviously it's a short week this week. But either way, it just hasn't been a lot of selling. You know what I mean? And this is just kind of a classic, like, you could either buy it here and use sort of a stop down here, or again, pick your level, whether it's a breakout or whatever you want to look at, and say, if this thing can really resume and the market looks better, could be buyable. Uber's not as pretty, but it's getting hit a little bit today, but it's still kind of the same general setup with kind of a big shakeout at the August lows, and then a rally back. And now it's getting hit here, but relative performance, this is kind of what I'm talking about. The Nasdaq is down here or whatever, and Uber's up here. I'm not, super high on Uber, but I just mean like, the chart is showing some relative strength here. And if it can get going, big if, that would be kind of interesting. Okay. Palantir, we'll see what happens, but I mean, this is PLTR. I think it looks fine. It can move around. 10-week line, again, 3 weeks of declining and below average volume on the pullback, which only means something if it finds support, right? I mean, if it just keeps doing a low volume pullback to zero, you can't take that to the bank, right? But at the same time, I wouldn't say there's a ton of supply coming into the stock at this point. It's hanging around the 25-day line. I mentioned Halozyme, and then just a couple of, interest rate sensitive things. I mean, it's a little obvious because, the Fed's going to cut and all this stuff, but I like Rocket Mortgage, or Rocket Companies, they call it, RKT. Just a nice base breakout, complete change in character, bunch of weeks up in a row on volume. It is hitting some turbulence here. We had it in top 10 this week, but again, you're just kind of down to the 25-day line. The risk with some of these is it's almost like a cyclical stock, like maybe growth, let's say ideally, right, that we're all hoping for. We get this retest and Nasdaq holds, and a week or two from now, we're going nuts on the upside. Maybe interest rates kind of pick up from there a little bit. The 10-year note, the yield kind of goes up, and maybe these things sag a little bit while the market goes up. But overall, I just think stepping back, it's just kind of like had a 2 or 3 year bear market and interest rate sensitive stuff, right? And now it looks like the trend is turning. These companies are leaner and meaner. And again, down here, not a lot of selling, certainly not compared to the buying on the way up. So RKT is one. Then, of course, your home builders and whatnot. I still think DR Horton is, it's the biggest one, and it looks fine. And you had this sort of big volume clue on earnings. And since then, it's just acted fine. It really hasn't been able to pull back much quite yet. And there's been no real selling here on this latest dip. So overall, just back to the market, it's interesting times. It's always frustrating to, you get hit, you come back, you get hit, like that sort of volatility. Sometimes it's easier if the market just sort of stays down for a little bit in that sense. But it is what it is here, and we'll just see how it goes. I would say the next thing to watch is next week. Does the Nasdaq come into the 200-day line? Is it a retest? Do we just cheese lower sort of thing? Now, I'm not necessarily saying in the next 2 or 3 trading days, but in the next week or 2 or 3 or 4, do we just cheese lower and the Nasdaq kind of has a big shakeout, maybe below this April low, that sort of, really big shakeout that sort of clears the decks for the next advance? Or do we hold up here? And how does everything work out, otherwise? Does the S&P and the Dow, the Dow has been, not to go on a tangent, but the Dow has been, again, like defensive stocks, it has been outperforming here. You can see relative strength. It's still above the 50-day line while nothing else is. So you'd like to see that switch as a dynamic to tell you that big investors are becoming more aggressive again. Right now, it depends on your positioning. If you have a ton of cash, maybe you do a little buying. If you fully invested, obviously, I'd probably be trimming. But overall, I just think it pays to be cautious, but also to dig into things on a stock-by-stock basis, because some stocks are getting hit today, they're getting hit this week, but on a relative basis, they're still in decent shape to participate, if the market finds support. Okay, that's all the time I have for today. As always, thanks for listening, and be sure to come by again next week for another Cabot Weekly Review.